Hello, everyone, and welcome to today's Blockworks webinar, Regulatory Horizons, Unraveling the Future of Crypto Compliance. Today's episode is made possible by Blockworks Digital Asset Summit. I'd like to invite our speakers to unmute their lines and turn on video. During the webinar, please submit your questions to our speakers through the Q&A function at the bottom of your screen. We'll save some time at the end of the discussion to answer these. The session will be available on demand, and all registrants will receive an email once the recording is live. I'd now like to turn the event over to Blockworks Senior Reporter, Casey Wagner. Casey, please go ahead.
Hi, thank you everyone for joining us. Today's webinar is brought to you by the Blockworks Digital Asset Summit, which is taking place in just 39 days. Join us in London, March 18th through 20th for crypto's largest institutional event. With over 350 institutions represented, you'll hear from 130 of the biggest thought leaders in TradFi and crypto. We have a great lineup this year with 45 content sessions and speakers including Anthony Scaramucci, Matt Hogan, and Brad Garlinghouse, plus all of our webinar guests today. Go to blockworks.com/DAS to purchase your ticket and use promo code webinar10 for 10% off your purchase. I will now turn it over to our speakers for a quick introduction, and we will get into today's compliance conversation. Rebecca, did you want to start?
Sure. Thanks so much for having me, and thanks for moderating us today, Casey, and thanks to everyone who came to listen. I'm Rebecca Rettig. I'm the Chief Legal and Policy Officer at Polygon Labs. I've been a lawyer my entire career, but a crypto lawyer for about the last 7 years, and started out really advising software development companies on how to think about policy and regulation in the absence of, a perfect one-to-one fit with existing laws. So excited to keep innovating and talking about it with all of you.
Thank you. Ian?
Yeah, thanks, Casey, and thanks for hosting today, Blockworks. I look forward to the event in March, as you mentioned at the top of the call. Hello, everybody. My name is Ian Taylor. I represent Crypto UK as a board advisor and also was the previous CEO and helped set up the Trade Association several years ago, which, as most folks will know, Trade Association's role to support the industry and the community, to advocate for the industry for proportionate and balanced regulation. And I also work for KPMG and I lead their crypto and digital asset practice here in the UK, which gets me involved in the weeds with building cool products and services that touch crypto.
Thank you. And last but not least, Julia.
Hi, thanks so much, Casey, for having me here today, and very excited, to be at the Digital Assets Summit in March. And maybe just a brief introduction to me and what I do. I am Julia. I'm part of FIS. FIS is a large fintech. We serve customers across, banking, capital markets, and until recently, we also, looked at, merchant solutions. So I'm working in our CBDC and digital currencies team. So what it means, we are looking at providing the central infrastructure piece to our banking clients, to our credit institution clients, to enable them to issue tokenized deposits, regulated stable coins, or maybe at some point in the future there is going to be a CBDC that is going to be issued by central banks. So that's a piece of work on the product side I'm leading within FIS.
Great, thank you so much. We will definitely get into a lot of those topics soon. I wanted to start with a question for each of you about what are the biggest kind of themes or concerns for crypto companies operating right now in the US and in the UK, or potentially in other parts of the world, when it comes to applying and adhering to regulatory guidelines. What's top of mind right now in the compliance space? Ian, did you want to start?
Sure, happy to kick off. Naturally, complying to money laundering and terrorist financing laws are the first area that's really targeted the industry. And folks will probably be aware the Financial Action Task Force, which is an intergovernmental agency, was the first to start looking at this and issued some recommendations back in 2019. And those recommendations have now been transposed into national law across many jurisdictions. And just the UK specifically, it was the first piece of regulation for the sector to do your standard customer due diligence when you onboard a client, transaction monitoring, and so on and so forth. This is standard procedures and processes that take place in many other industries. And the UK has had let's say, a challenging approach to this first activity-based piece of regulation, both from the regulator and from the industry, getting up to standard, understanding the nuances of some of the business models and different products and services. But this has been live now in the UK for 3 years. And then the other one that's top of mind at the moment for us here in the UK and globally as well, and we work closely with folks in Europe, is regarding market integrity and market surveillance. The consumer protections of agencies, whether they be consumer on the institutional prudential side, want to ensure fair and orderly markets, that there's no gaming of a particular infrastructure or particular exchange or trading environment. And this industry has some nuanced new features, which we can get into weeds about that later. But that's just two from me, and I'll hand over to the other guys to give their views also.
Julia, did you want to continue with the UK perspective?
Yeah, and I think, I echo everything Ian said in terms of AML, KYC, CFT, those are kind of, the critical components. But I also think, what we are probably not seeing across the globe is the kind of, convergence in terms of regulatory standards across the globe. I think, that could be, very important. And I think, we are working at the moment on regulated stablecoins to enable, banks and EMIs, to issue regulated stablecoins in Europe. And, whether those are e-money tokens or whether those are asset reference tokens. And of course, MiCA regulation is in place. It's, very comprehensive, but I think, there are a lot of kind of, questions we pose to our legal teams, what is acceptable, what is not acceptable. So I think, at least, in Europe, regulated stablecoins are regulated. I think, in the UK, we are still a mile away from, getting, regulation in place. And I think, we are in the UK maybe, putting ourselves to, a bit of, to disadvantage. I don't know if, panelists will agree to this in terms of what we are seeing here from the FCA. But again, there are a lot of different countries that, have implemented some sort of, regulation. And I think, Monetary Authority of Singapore, they have, some regulation in place as well that is, quite useful to look, up to. So I think, convergence and having kind of, the global standards would be incredibly important in kind of, regulating the space and having standards for AML, KYC, CFT, what Ian mentioned.
Rebecca?
I have a lot to say on this. So it's so interesting to hear everybody, because I think all of us on this panel engage in different ways with different regulators on different topics. I think I can safely say that I think I'm going to call it illicit finance, because I think it's different than just anti-money laundering, and certainly anti-money laundering and combating or countering terrorist financing is not just about KYC. It's a really comprehensive thing. So I don't want us to tag it to that. And we can get into more about how it works a little later, because I don't want to be too substantive yet. I want to be sort of at the high level that you started us off. I think that's the most existential question for all of crypto, both on the centralized and decentralized side. And then as Ian said, the market infrastructure piece is really important. We've seen market structure really come through in a strong way in the EU with MiCA. I think, and everybody has said, this is so great, we have this novel piece of regulation. And then what people aren't talking about as publicly is that some of the illicit finance regulation that's coming down in the EU is extremely restrictive, and also is going to make it very hard to continue operating for crypto companies in the EU in different ways, notwithstanding the fact that MiCA is giving you this framework, some of it which is very, very restrictive, especially for stablecoin issuers. I actually think the UK is a great place for crypto, and I would say it is not hamstrung at all. And Ian probably is great to attest to this, but there are a lot of us who have been engaging with UK regulators for many years before even the UK came out and said we want to be a crypto asset hub. They have been thoughtful about this, I'd say, for at least, Ian will probably tell me I'm wrong, 5 years, and been really quiet about it. And which I think is great. And it's really evidenced a lot by what HMT has put out in terms of their framework and their classification system. And I think if anyone is getting somewhat left behind, it may actually be the US, because what the UK is doing is very much in line with MiCA. And as Julia said, a lot of the Asian countries have all sorts of licensing regimes in place and are really doing work to attract crypto/Web3 companies. I'd love for there to be global standards, but Julia, I don't see that happening because I just think it's hard and everybody has different regimes. I think there are common threads that come through a lot of this, including, as sort of Ian said, the AML or the illicit finance and the market structure pieces, but I just think it's going to be hard to have global standards.
Ian and Julia, I'd love to hear your thoughts and whether or not you agree if the UK is kind of getting it right in a lot of these areas. When you look at the US and the EU, I mean, what is the UK doing differently, and why does it appear like things are going well there? And for a company operating there, why is compliance potentially easier or at least more clear?
Yeah, I'm happy to kick off, and then I'm sure Julia can add something. I guess it depends who you talk to, because if you talk to some market participants, they might have a completely different view as they're trying to deal with how they promote their products and services in the UK when we have a new framework for financial promotions, which has just pulled in crypto businesses, causes some confusion. But the way I look at it, more from a pragmatic view, is, yeah, regulation's a broad instrument, but there does need to be some protections for reasons that we're all aware of. I mean, the UK has a good perception of being an innovative jurisdiction that has a pedigree for financial technology that was a government strategy 10 years ago. And then what we did when we set up Crypto UK back in 2017 was to ensure that the government got the policy position right, which is kind of easy to do because we just worked in what's called the Khalifa Review, which is a fintech review looking at all the opportunities for the UK to promote its products and services for direct investment, to grow the economy, etc. And all you need to do, but we made sure we got some wording in there, compared it to what was happening in Brussels in Europe, and then that gets into the government language, which Rebecca rightfully said was announced in 2022. You could be a crypto hub. That's easy for the government to do because then now we got the hard work of getting these individual strands of the regulations right, which, as I said, some of them are good and progressive and principles based in the UK vis-a-vis in Europe, which is more rule based and more focused on specifics. And it's not a race to the bottom, which is perhaps how some jurisdictions are looking at attracting investment. It's that balance of making sure you maintain, a credible set of rules and guidance for a new sector that is the same in some areas, but is fundamentally different in other areas. So what we've tried to do, now we've got the policy, is as we get this downstream to the regulatory agencies, is be mindful that some of the existing framework that we already have for financial services does work, but actually, there's a good case in point. We should also have some bespoke new sets of frameworks. And a really good example of this is staking into a layer one. So providing your capital into a blockchain so it functions and the security is upheld in it, provides a public good for many people to come along and build on top. It isn't a financial service, which is exactly what the UK government has proposed. So that's one of the areas that we're dialed into right now to make sure we, navigate what can be a complex discussion around some of these new interesting technologies.
Look, to be clear, I agree. The UK isn't getting it perfectly right? There are some things that are great, and I think there are some things that have caused a level of concern and confusion the same way that other countries have done it. So like the financial promotion rules, which is really just meant to be a consumer protection mechanism where there's clear, and easy disclosures for users or customers of certain types of crypto companies, I think has caused lots of confusion for lots of market participants all over the world in ways that have caused some people to block the UK, which I just really think was not the overall, or I just don't think it is consistent with the government's overall approach to how they're thinking about things, not even from a crypto asset hub perspective, but I think the UK has been so deliberate. And so it is not a perfect system by any means, but I do think they've been really thoughtful in trying to do a good job. So I'm with Ian on that. It depends.
Yeah,
Julia,
and I
did
think
you have
from
any
our
other
point of
thoughts?
view, we're seeing definitely a lot of development from, UK and Bank of England in particular. I think, if we are looking at, central bank digital currencies, right? We are seeing a lot of development, a lot of thought leadership, a lot of consultation papers from the Bank of England. And we are seeing, of course, some of the, POCs, Bank of England observers of, Project Rosalind, which was an important project with Bank for International Settlement. So I think, we're definitely seeing a lot more activity from the UK. And of course, we have seen a lot of activities in the past few years from Europe. We've seen some of the wholesale projects, from Banque de France and other countries in Europe. And I think, also there were, a couple of, news articles recently on, ECB, kind of looking for, various, vendors on, digital euros. I think, that's also, coming along. So I think, there's definitely a lot more activity from Europe and the UK. And probably less from the US. We don't really hear the position from the US on, CBDC. I think, in terms of crypto, Europe, of course, is, a bit ahead, in regulating, kind of, all these, assets, and in particular, kind of, establishing the MiCA framework. Of course, it does not include everything. So I think, there's a lot of room for improvement. And I think, that's going to be, something that, is going to be enhanced and improved in the next couple of years.
Well, one
Yeah,
thing
definitely.
sorry, Casey, I wanted to ask actually, Julia, when you were talking about the UK, because we're focused on the UK and our central bank, the Bank of England, I was somewhat surprised that they're driving forward with a retail CBDC. I personally had expected that the design would have been more focused on the wholesale, having spent a few years in the capital markets. And obviously you work for FIS, so this is good for your business model, right? And how are you thinking about that?
Yeah, I think, in terms of like, what we are thinking, we do have a solution that supports, retail, wholesale, and cross-border, CBDC payments. So we are fairly flexible, and our model is fairly flexible. Of course, we did think that, wholesale market is going to grow, faster. Well, it is a, faster growing space, right? And it's a much larger, space as well by volume on its own. So, we did, expect that, there will probably be more activity on a wholesale side, but it seems like, more central banks are actually interested in the retail CBDC space. And, of course, we are working alongside central banks on, retail, wholesale, cross-border CBDC, and, allowing them to use our kind of, central infrastructure to enable them to issue CBDC. Of course, from kind of, capital markets, wholesale perspective, right? It's very, very complex. It's very complex in terms of all the kind of, components, infrastructure components that exist in a wholesale space. So I think, there is a lot of opportunity, but it's very, very complex. And I think, we'll definitely see a lot of, development in the coming years, in the wholesale space from central banks. But retail, CBDC is a good starting point as well, I think.
So can I ask a question? Because I've had a lot of the same experience. Well, I've had some experiences you have, especially when you're talking about the Banque de France and their wholesale CBDC. I think they are so far out of head, and like nobody is talking about it. So I've been thinking about the benefits of a wholesale CBDC, but I was so interested when you said you actually think about a retail CBDC really being more important. So from your conversations and from the work that you're doing, and maybe explain even to our listeners, like what a wholesale CBDC does versus retail, because people throw that around a lot, and it's somewhat harder to understand who's using what. Why you think central banks are interested in the retail more, and secondly, how we're going to deal with the privacy problem. on?
That's a big question, right? So I think,
I
in
know, but
terms
we
of,
have
yeah.
like 40 more minutes or whatever. So you can probably tackle it.
Good question. I think I'll steal the show, so I would love to hear your opinions as well, Rebecca. I think it would be incredibly valuable to hear what you guys are thinking. I think I don't mean that it is important to retail CBDC is more important than wholesale CBDC. So I think there is definitely both are important, equally important. I think there are some jurisdictions where retail CBDC is more important than a wholesale CBDC, but then again there are some jurisdictions where wholesale CBDC is probably more important. It really depends on the economy and the construct of the economy, right? There are some economies where there are more wholesale payments than retail payments. I think in terms of retail CBDC versus wholesale CBDC. I think it really depends on central bank objectives and policy objectives. What do they want to achieve? And all the central banks have their own policy objectives, and I'm sure Rebecca, you can echo that. There are different views from different central banks. So we don't really dictate to central banks, what is better and what they should, do first. It really depends on, what is a policy objective from the central bank and what do they want to achieve. If it's retail CBDC and you are serving that, to your, consumers and users, and you want, to achieve, financial inclusion. Of course, maybe, you should, focus, on the retail CBDC. There are also, economies that are, island economies, and maybe they're scattered across, 8 different islands or, hundreds of different islands. Maybe for them, those are kind of, the policy decisions and implementing a retail CBDC is very important. So it really depends, on, what is your kind of, outlook and what do you want to achieve with retail or wholesale CBDC. But, maybe good to hear from you guys, on, Rebecca, Ian, what are your thoughts on retail wholesale CBDC? Since you're coming more from the crypto world.
I'm glad you threw it back, Julian. But by all means, don't think this is a gang up from, I guess, the crypto native nerds. I mean, I believe in innovation and technology, and if the state is going to throw a new payments architecture, then I'm all for that, right? That's a good thing. But after seeing over 50,000 people respond to the government consultation, which I mean is unprecedented, you normally get maybe 1,000 if you're lucky, or a few thousand in what is financial sort of services or related public consultations to get feedback from all stakeholders. It clearly tells you that the voters in the UK do not like this idea, not just from privacy, but maybe control factors. And we've seen that with other design features and other maybe authoritarian states. And I always come back to the question, the government has to listen to that. And at what point does that impact on the roadmap of maybe several years, 5 years to launch a thing here in the UK? Even though I do believe there will potentially be an act of parliament to bring this in, so that's not going to be easy. And then secondly, the Bank of England the government has been clear that it's going to be super laser focused on the privacy aspect for the reasons that I mentioned in the consultation responses. But even if you've got like the best privacy tools, the best cryptography, the best new smart solutions that lots of people in the crypto asset industry are developing, really cool new privacy preserving tools. I wonder if that's going to be enough. Sorry, I don't mean to be a naysayer. Just that is a very hot topic. And then add into the mix the politicization of CBDCs and the threat of some sort of state actors using it as a tool and weapon. I mean, it's an interesting debate for sure.
That's actually a good place to pick up, Ian, because I think one thing that's really overlooked on the CBDC issue is for individual countries to be settling different types of international transactions with their own CBDCs. And so the Bank of International Settlements has actually, I think it's called Lion Rock. They've done that. Yeah, they've done this pilot program where 4 different countries, Thailand, or 4 different state actors, Thailand, China, Hong Kong, and somebody else I can't remember, are all working to settle transactions using their own CBDCs. And we've actually seen China settling their international deals with Russia using the digital yuan. And so I do think this concept of wholesale CBDCs brings issues that we haven't focused on as much, but as Ian alluded to at the end of his last question, which is like, what happens when state actors have this autonomy that's outside of this broader financial system that we've been operating within? And so there's a lot of innovation that comes with wholesale CBDCs, and we've obviously been concerned about privacy with retail CBDCs. And I obviously have thought a lot about that and where privacy can come in. I actually think it is a combatable issue, but it's going to take a long time. And so nobody should be sort of overlooking that. But I do think it'll take a longer time. But I do think the state actor point with respect to wholesale CBDCs is something that we should be focused on for sure.
And we're definitely seeing a lot of kind of, cross-border, payments, made. And I think, there was, an announcement recently from Central Bank of UAE and Central Bank of China, PBOC, right, that, they have executed this, first, transaction. And it's a live transaction. It's a real world transaction, which was, pretty cool, right? And I think, in terms of like privacy, just to, kind of, add, on innovation, I think, we're definitely seeing a lot of new innovative ways of, preserving the privacy. And I think, ZKPs is, one of the, element that, could, potentially help, and preserve the privacy. Again, we do trust, with our, PII today, wherever we hold a bank account. So why wouldn't we, trust this new kind of, evolving new payment, landscape, and holding, CBDC in our wallet. I wouldn't probably, be concerned with that. But again, there are different end users and different concerns, I guess.
Do I want to trust the state or the private sector? No, I want a trustless world with this stuff.
Yeah,
I think
definitely.
we definitely will see more innovation, right? And I don't know, Ian, if you guys, seeing a lot of innovation in this space and, a lot of product development, but I think, technology is becoming more sophisticated. And I think, Rebecca, from you guys, you've done, great, projects, and you have done a lot of development, right? So you probably can add a lot of innovation is, happening in the background, and a lot of new techniques are emerging. That's for sure.
Yeah, new forms of digital. It's one of the many use cases that the technology provides for. I talked to loads of companies, advising them at KPMG on building a stablecoin, for example. What are the use cases? How do you commercialize that? So yeah, innovation's good, right?
I wanted to really quickly remind the audience to submit questions. We will be doing a Q&A portion toward the end, so please submit your speaker questions there. And then back to the topic of CBDCs, Julia, you mentioned that the US is, I would say, one of the slower moving countries on this. Fed Chair Powell seems pretty skeptical about CBDCs. There are a lot of efforts in Congress, mostly from the Republican side, that are very anti, at least a retail CBDC, mostly for privacy concerns, which Rebecca, you brought up. Rebecca, I'm curious, if the US is not engaging with CBDCs and working toward it, what's kind of the global impact of that? Is it a race that we need to be involved in?
Great question. I think given the prominence and the dominance of the US dollar as it is today, notwithstanding efforts to the contrary, I think that if the US gets stablecoin legislation in place, we may not be at such a disadvantage on the CBDC route. I think that the private companies that have done a lot of work to build out these fiat-backed stablecoins, if/when they get regulated, which I will say seems likely. There has been a lot of fits and starts in the US on this, but we saw the Treasury Secretary, Janet Yellen, talk even in front of Congress earlier this week, I think it was Tuesday, and say that she believes that we need stablecoin legislation. Leads me to believe it is coming and imminently. And I think once we're there, as long as the illicit finance concerns don't impose too many problems for dollar-denominated stablecoins abroad, then we may be that may be a way around the CBDC issue for the U.S.
Yeah, definitely. I know there are a lot of bills in Congress that will probably not actually make it to the floor for a vote. But you're right. I mean, we saw Janet Yellen. She's actually in front of the Senate today talking, but yeah, she was in the House on Tuesday. I obviously cover regulation in the US, so this is something that I'm a little bit more focused on, but it's things move slowly. So we'll see if we get some sort of federal standard on that. I wanted to get back to illicit financing and anti-money laundering. That's a huge topic in the US right now. It's very timely with regards to terrorist financing. And we've seen a lot of efforts in Congress and also a lot of papers from the White House and Treasury talking about kind of the need for bringing crypto under this KYC umbrella and this AML umbrella. Rebecca, how are you kind of thinking about the current discourse in the US? And then I'd love to hear from Julia and Ian too about how things are progressing in the UK and internationally.
I'm thinking deeply about this question in the US, actually, from a number of levels. So I think there are people who are involved in what we think of internationally as VASPs, right? Virtual asset service providers. So in the US, we don't have that term, even though it's a Financial Action Task Force or FATF term. But most of the centralized crypto actors in the US already come under the Bank Secrecy Act because they are money transmitters. And so they already have a lot of the same obligations from an illicit finance and a sanctions perspective that TradFi may have. Now, there may be some other issues with how those institutions engage with other foreign actors, right? This concept of the correspondent banking, which is a little esoteric, but it is about how you can interact with international actors as a US regulated Bank Secrecy Act covered entity. But I think that we only have a few extra steps to take when it comes to centralized actors in the crypto space and ensuring that we feel like the current financial integrity regime covers them one-to-one, right? In a way that doesn't impede their businesses. Now, I think that the discussion or the discourse in the US has progressed far, far beyond just what we do with centralized actors or VASPs in the US in a way that is problematic and does threaten to shut down or push offshore a lot of the US-based activity. Why is that bad? It is not only bad because we don't want to stifle innovation, and the US has always been a tech center, but I think FATF, which is an international money laundering regulator, has basically made clear through its data that there is maybe 17 to 20% compliance with the FATF guidelines globally. And where are the most non-compliant VASPs or exchanges or whatever? Offshore, outside the US and outside of Europe and the UK. And so taking such a broad brushstroke and really restricting the use of the technology will push people into areas that we already know, based on this international regulators' work, are non-compliant. So first, we don't want to, those are not what we want to be doing. I think with respect to thinking about the technologies. So I put out a paper with Mike Mosier, who's a former acting director of FinCEN, and with Katya Gilman, who's the senior public policy lead at Polygon Labs. Last Monday, you can find it on Twitter, but you can also find it on SSRN. And we did a 2-page summary, if you don't want to read the full 45-page paper, about how to combat illicit finance in DeFi, because the discourse has now come to capturing DeFi services. We didn't address this other very problematic concept of making validators into financial institutions subject to the Bank Secrecy Act, which, by the way, is not just KYC. Under the Bank Secrecy Act and all other types of regs like this in the United States, KYC isn't actually ever mentioned. It's just the way that financial institutions have implemented a lot of the requirements under the Bank Secrecy Act. But we wrote this paper about how to combat illicit finance in DeFi. And one of the reasons it's 45 pages is because this is a hard question. I think, though, that regulating finance in general is a hard question, and regulating software on its own is not something we do day in and day out. But there is a regime in the US for how we think about risk management with software, including software that underlies current financial institutions. So things like, obviously, there are computer servers that support all the services that JP Morgan or Goldman Sachs put out to their customers. that all has not a full regulatory structure, but the way we do risk management with software is well known. And so this concept that regulators have been putting out, like same activity, same regulation, doesn't fit one-to-one. We actually have to look what is happening and come up with a risk management scheme that will be effective. And so that may be more complex, but I do think that it's worth the time and probably maybe even more effective, especially given the transparency of all blockchain-based transactions, except for maybe on private chains, can even be more beneficial to law enforcement and to the goals underlying the financial integrity regime in the United States. That was a very long answer. I'm sure Ian and Julia have better, more concise things to say.
Well, I will just commend you and your collaborators on what is a very good solution to a difficult problem, which is something that lots of people have been talking about in many different areas of the industry, but nobody has really suggested a way from a holistic approach to ensure that you strike that balance of proportionate protection against illicit finance, which nobody wants that because that's bad for any society, but at the same time allowing for the development, innovation, and new interesting technologies to emerge. So in my experience, a lot of the focus goes more on protecting against illicit finance. And I'll just share one little story. I remember being engaged with these financial action task force contact group sessions a few years ago when they were looking at defining what the definition of a virtual as a service provider was. And we spent a lot of time making sure that non-hosted wallets or private wallets weren't included in that definition, because that's just fundamentally a huge problem for those that are writing software to deploy what is in essence a security device to store private keys. That is not how we should be looking at this, where existing regulatory frameworks focus on a central entity or particular activity. There needs to be a fresh approach, which I think your proposal gives a fresh approach.
Yeah, and I think, just, maybe a brief comment. I think, Rebecca, said pretty much everything. She, obviously wrote a really good paper. So I think, in terms of what we are doing, for our, regulated stablecoin product, that is, servicing our European market. Of course, that is, pretty comprehensive in terms of, compliance and, all the kind of, illicit, activities and, KYC, AML, sanction screening. And, within our product, there is a compliance, suite, that is kind of, enabled. And of course, there's also, a transfer of funds regulation that is kind of, being implemented in Europe. So I think, that, framework is pretty helpful, in order for, issuers and developers to issue those regulated stablecoins, whether those are, EMTs or ARTs. So I think, from my perspective, to build a product in Europe, I think it's a good time right now because it's, fairly comprehensive structure we have.
Yeah, definitely. I wanted to remind the audience again to submit any questions that you have for the speakers in the Q&A function. So we've talked about CBDCs. You talked about some of the more specific policies that we're seeing in the US and the UK. I'm curious, for crypto companies that are, trying to act compliantly in the US and the UK, also around the world, what are the biggest barriers that they're facing right now, just in terms of getting compliance correct? Is it that the rules are unclear? Is it that requirements are not achievable? And what are some key areas that companies are really focusing on or should be focusing on? Rebecca, did you want to start?
Sure. I think, it depends on what you're doing. That's the lawyerist answer ever, that it depends. But if you're a centralized or company, or you have centralized components, I do think that those good actors are really trying to get their licenses where they can, both in the US and abroad, put good consumer protections in place, and engage constructively with regulators and with industry. I think it's harder as a software developer. I will say there was a period of time, probably earlier in 2023, where software developers were really fleeing the United States. I haven't heard as much. That may still be happening, but I haven't heard that as much. But I think it's hard to know because it's what are you building? How fast, and then there's this narrative that decentralization might get you out of regulatory stuff, may not. And I will say, having worked in this space as a lawyer for many, many years, it is becoming, as what to do on the US side, less clear to me instead of more from a pure software development standpoint. And it really just dawned on me, that point just dawned on me maybe a month or two ago, where I was like, I need to use a different metric for how I'm making decisions, even as a software developer, about how we're building things, right? Now, the metric is always, will the users be protected? But that means so many different things. And so from a US perspective, it's definitely getting less clear. But I think there are the biggest actors and even some of the small actors who are getting great funding from really responsible VCs are just trying to think deeply about it. One thing that, not to shill too much, but one thing that Polygon Labs, along with a few others, has really pioneered is this concept called crypto policy boot camps, where we put on a free event. We bring in policy leaders, both from industry and from the political side of things. We did one in DC, we did one in New York, we're doing one in Paris, March 18th, and one in March 15th, and one in London, March 18th at the beginning of DAS. So we won't take people away from the conference, and we're doing it really close to the conference. That is really meant to help founders and investors and people who have not engaged in the policy and advocacy process before get savvy about it, because I think one of the things that's most important, and I know Ian feels this way just from his work with Crypto UK, is like, this takes a village. It is not just people who've been doing policy or law or regulatory work, and it's not just the biggest companies. It's all of us need to be working together. So that's the other thing I'll just put out there.
Yeah, even more reason to come to London. I wanted to quickly ask a follow-up there. When you're engaging with regulators, I mean, what are these conversations like? Are there any like popular, like common misconceptions that you hear? Are regulators interested? Do you feel like they have a solid understanding of the technology? Does that become reflected in policy? I think it's really important that the industry knows how to engage with regulators in a productive way. So what's your experience been like?
Great question. That's some of what the crypto policy boot camps are for, is meant to really help people suss that out and figure out how to do it and how to even get your foot in the door, and then what you say once you're there. And then to your point, how to assess the savviness of various different regulators and policymakers. That's really person and country dependent. So it really isn't, it depends, but it is definitely who you're talking to and where in the world and what their policy goals are. So I think, that's you have to figure it out once you're there.
Yeah, definitely. Well, covering this space, it definitely seems like even in the last couple of years, crypto companies are more interested in engaging and kind of recognizing the importance of that, both in the US and internationally. Ian and Julia, I wanted to give you an opportunity to respond to the first question. What are the biggest barriers in compliance right now? And, is that just coming from a perspective of things are not clear, or is it the rules are presenting challenges that are unattainable for a lot of companies?
Yeah, and
Ian,
I think,
did you
I'll
want to
have a very brief, comment, to this. And I think, I agree with what Rebecca said. It really depends on what you're doing. If you're doing cross-border payments or, it really depends on activity, depends on the country, depends on the kind of, rules and users and the activity that you want to perform. I think, I'm kind of, back to square one, on kind of, interoperability and standards. If you want to do, the kind of, cross-chain, transactions, or if you want to do, country to country transaction, cross-border transaction, then of course, you do need to have like some kind of, standards, and, some of these networks, they need to be interoperable with one another. So I think, for us, and, we are seeing across, CBDC, and, tokenized, deposits, and, for regulated stablecoins. I think, for regulated stablecoins, we are definitely, seeing a lot more standards and, industry participating in conversations. I think, with, tokenized deposits and, CBDC is just too early to achieve any type of standard or any type of interoperability. But again, we are seeing a lot of activity from the industry, and we are, seeing standards emerging, that's for sure. So from my perspective, the kind of, the only barrier and challenge at the moment is how do we work with all the industry stakeholders, and how do we, work with different countries?
To add my few thoughts, I also had the initial same lawyer answer, although not a lawyer, as Rebecca. It kind of depends. But one thing I would say with lots of firms I speak to, uncertainty is an obvious problem for any business, irrespective of what you're doing, where you're operating. That uncertainty is very difficult for any founder or any senior person in a company to build out a roadmap, to plan for the future when there is so much uncertainty. And that's one thing that I hope we've got right in the UK and also in Europe with a comprehensive framework. It might not be perfect, and I mean, gosh, there's quite a lot of things that are far from perfect, but it does address that uncertainty. And then that does allow for investment, whether from overseas into your individual country or all those domestically that want to, build a product that touches crypto and blockchain in some way, because the uncertainty is difficult for any business.
And then one quick question for everyone before we move on to audience questions. In terms of the next 6 months to a year, we'll say, what are the key areas that you're watching? This could be key areas of policy that you're looking for clarity on, any upcoming laws or bills that we might see, we'll keep it broad. Rebecca, what are your biggest compliance things to watch this year?
I just think the bills, so three things really. The attendant bills to MiCA in the EU are really, really important. They've been coming in all sorts of different ways, some of them on the illicit finance / AML question, some of them on data protection. And so I think we will see crypto provisions snuck into all sorts of types of legislation in the EU. I think the UK is doing this great crawl, walk, run approach. So they've done, they've classified stablecoins as a financial instrument, and they're like slowly doing the building blocks of what they're doing there. And then Asia is real, and the Middle East are really putting out various licensing regimes and doing a lot to attract crypto and Web3 companies. So I think that's all really going to happen in sort of major ways in 2024. And I think being licensed all, around the world, as we've seen some of the larger crypto companies do, is really important. The US, I mean, maybe stablecoin legislation, but, not much else there.
Ian, what are you watching? Or what should we be watching?
Is it True Detective 4? No, that's the other chat. The crystal ball question. I mean, for this year, domestically, a lot more clarity around many of the different activities and that we've spoken about. We also have this interesting regulatory sandbox for financial market infrastructure that will go live. That'll be cool to see if we get many applications into that. We think Q2. And this is more for TradFi, combining a number of activities that operate within financial markets using blockchains to shrink the number of folks that participate in the infrastructure. I'm seeing quite a lot of development in the intersection of AI and blockchain, which is kind of cool, which I find really interesting, because I used to think a few years ago the two were very different, insofar as AI is a black box. We're not quite sure what goes in or how it comes out. Whereas blockchains are inherently there to be, public infrastructure. We all can agree this is the truth. But with the advent of some perhaps bad policy or regulatory focus in some of the big jurisdictions, the censorship-resistant use case of blockchains is quite powerful, and that's what a lot of people are looking to utilize with some of these LLMs. And create marketplaces. We're using tokenized assets and what is now a tried and tested area of token economics to incentivize people to come and provide compute power into these networks. We've seen this on other chains, like Filecoin incentivizes people to provide storage, but a different area of providing compute power for open source LLM. So that's something that has just picked up in the last few months. And other than that, hopefully further adoption. We can draw the line in the sand post the FTX case and the Binance ruling, so we can just start not having the same conversations over and over again with government. This interesting industry scores a few own goals, but let's move past that.
Yeah, and I think, from my perspective and kind of, product perspective, what, we are seeing in the market and, things we are watching probably in the market, we are probably expecting to see more central banks experimenting with central bank digital currencies, whether that's, retail or wholesale or both. I think, there's definitely going to be a lot more activity with the CBDC. And I think, maybe we will also hear more from central banks on, whether they want to do any live implementations in terms of, CBDC. So I think, that's something, we are watching this year. I think, also we are seeing a lot more conversation, with commercial banks on tokenized deposits. So I think, there's definitely going to be a lot more conversation around, tokenized deposits or deposit token. So I think, that is, something that, we'll see probably more activity on, this year. And then, of course, we are, looking forward to, MiCA regulation taking off and, looking at, of course, Rebecca is not looking forward, maybe. Yeah, so I think, that's something we are looking forward to in regulated space. And then I think, Ian, alluded to kind of emerging tech. Of course, there will be, some impact of AI and, artificial intelligence in this space. And it will be interesting, to see how, blockchain and AI, could, converge together. So I think, there would be some interesting use cases out there to explore. But I don't know whether that's a question for this year or for next year.
Thank you. On the topic of tokenization, we got a couple audience questions about tokenized securities and real world assets. I'm curious, Ian, did you maybe want to take the first one about how we might see regulation in this area evolving? Are you seeing RWAs gain traction? What are some regulatory barriers, I guess, that we're seeing there?
Yeah, this is when people start to use the acronym RWAs, coming from a trading background, I just see risk-weighted assets, which is something completely different. But
yeah, sorry about that. Real world.
No, that's not your fault. The industry's just picked up that acronym and running with it. I mean, tokenization is much clearer in my mind that you can take a financial product, in fact, you can take pretty much anything, and represent it on chain, and that gives you a whole host of benefits. Because tokens are inherently, well, there's other design features, mainly designed to prove and secure ownership. And so you've got all of these things that people want to transact, buy and sell, whatever it might be, or send to another person. Then the technology allows for that, and the infrastructure has grown, and the amount of apps have improved, and the infrastructure and the security has developed over the last decade or so. So the financial services sector is looking at using some of the benefits, or many of the benefits that technology brings, and then rolling out products and services using blockchains. And the UK government, both the incumbent, the Conservative Party, and the potential new government, Labour, we have a general election later in the year, have both mentioned this in their financial services manifestos. And there has been regulatory clarity and investment from the government. I mentioned the security sandbox, and I put into the chat, there's also an equivalent in Europe called the DLT pilot regime, DLTR. So yeah, there's support from government, there's investment in creating regulatory clarity. So I think it's only going to go one way, up.
I think there is still a question in terms of security tokens. Is it a stable coin, or is it a specified investment? So I think, that still remains a question, right?
Yeah, definitely. And then Rebecca, I wanted to ask you, we got one question about the Staff Accounting Bill 121. So are you familiar? Okay, obviously you are.
I'll say that's not that is not what I have focused on as much. So I know it vaguely. I may not be the best person to, I'll be honest, I'm probably not the best person to answer the SAB 121 stuff. So but happy to try. I think the answer to this question is and as you alluded to earlier in this session, it's gonna be hard to get anything. through.
Yeah, and for the listeners, really quick, so this is a US, it's not a rule, it's a policy from the SEC that asks custodians, among other things, to keep a corresponding liability on their balance sheet for custodied assets for this quote unquote risk that they take on with holding crypto assets. And there are some efforts to overturn it. Rebecca, I'll hand it back to you.
No, I think I was just going to say it's hard for to envision a lot moving this year, just given that it's an election year and given how the two arms of Congress are divided and within the arms how they're divided. So I just think, however, that does not mean people should stop engaging on policy. I think this is the best time to engage on policy, not just in the US, but everywhere, but definitely in the US too, because there's some time to do some education and to think deeply about how we can move things forward, both on market structure, as Ian was saying, and on the illicit finance question too, and really think about being productive from a long-term perspective.
Yes, definitely a great call to action to end on is engage with your regulators, stay involved, lots of opportunities in the US definitely to submit comment letters and call representatives and local officials. Thank you so much to the audience for joining us, and thank you so much to our panelists. I think this was a really great discussion. One more reminder to please join us at the Digital Asset Summit in London in March. You'll get a chance to meet Rebecca, Julia, and Ian in person. Please go to blockworks.com/DAS and use promo code webinar10 for 10% off your tickets. Thank you all so much.
Thank you, everyone. Bye-bye.
Thanks so much. Thanks.
Bye.